Good morning, everybody. Good morning, Peter. Good morning, Dr. Goodluck. Good morning, Mr. Alex. Good morning,
Good morning, everyone.
Good morning, Leila. Morning, everyone.
And good morning, every participant here on the call. Thank you so much for taking time with us today. We specifically would like to thank our guest speakers and distinguished panelists for taking time to come join us today. We're hoping that today's session will be very impactful. We have over 90 years of experience embodied in our panelists and guest speakers. So I'm sure you have your pen and you have your paper ready to take notes. We'll jump right to it, but I'll just start by talking about the convener of this event, that is Softcom Limited. And I would go on to just talk about ethics. I would also speak briefly on the agenda and what we expect to get out of today's event. Thank you so much once again, and we're glad to have you here. So today is a very, very interesting day. Typically at Softcom, we have what we call the Future Webinar Series, and we have it about 2 or 3 or 4, as in the case of last quarter, in every quarter, where we just bring together thought leaders that actually take us through series of discussions or questions around burning issues. For us particularly, what brought to fore this discussion today was COVID. And we thought to discuss around the FMCG sector, the value chain, and even the retail segments of our economy as to how best we think we can leverage on technology and automation in improving how we address our customers' demands and needs. And so today we're going to have a keynote speaker, after which we're going to have panel members that will answer burning questions that we have regarding the topic. You also have an opportunity to ask questions and react and interact with our panel members as well as our keynote speaker. Now about Softcom. In the next 2 minutes, I'll just talk about the convener. Softcom is an innovative organization that is very, very concerned about connecting people and businesses with meaningful innovation. We typically would like to say that we're all about inclusive growth, how we can bridge the gap between where we are and where we need to be as a society. We're currently 13 years old in 3 locations, pushing 300 in headcount, and very, very concerned about the young and upwardly mobile, as well as the women. So for us, we are very particular about reaching our communities and impacting our communities where we thrive. Young people that are the future of tomorrow, our business in which we operate, and then organizations that help create structure in which we function. In doing that, what we thought to do was look at some of the key areas that we thought had fundamental gaps in our society, either in Nigeria or Africa as a whole. And there were 4 key pillars that we identified. One was in identity. I think everybody here will agree with me that if you are not identified by society, then you do not have access to social infrastructure. And currently, I think we have about 40 million max, Nigerians, or 42 million the last we checked, that are actually identified through any of the structures that we have for identity. The second one was in learning. We realized that we had just about 2 in 10 children that make it to higher education. And more so, we're also very focused on education within the 4 walls of a particular school or environment. The third one was in payment. And currently we have less than 40 million people that are financially included. And that actually creates a gap as people cannot access financial services that help them thrive and grow within the environment they operate. And the final one was data. We say data is gold. How do you leverage data for insights and growth within your organization? So if you want to learn more about any of the 4 key areas in which we operate and the solutions that we've built around them, PassID, Koya, Eyowo, and DataBeaver, please visit www.softcom.ng, or you could type in the comment section chat box below, and then one of our hosts will get right to it. So I want to thank you again so much for taking time out of your busy schedule to be here. And thank you so much to every panelist on this call and our guest speaker. We're hoping that we'll learn so much from you today. And before we go right to it, what I would like to do right now is to introduce our guest speaker. He is the Managing Director of Grand Series Limited, an integrated FMCG company whose primary activity is the creation of superior value from local raw materials with leading brands in the cereals, vegetable oil, animal feed categories. Prior to his role, he was the Managing Director of PZ Cussons Consumer SBU. He currently holds a degree in biochemistry from the University of Port Harcourt and a law degree from the University of London. He is a faculty member of AGDC, an enterprise set up to prepare college graduates for employment or running their own company. I mean, I would know because I benefited from AGDC a couple of years ago. He is an experienced business leader with over 20 years of experience in building people, customers, and brands from P&G, British American Tobacco, and Guinness. He started his career at Procter & Gamble in 1998, where he played the roles of Unit Sales Manager North, District Manager, and later Customer Service and Logistics Project Manager in the company. Within the organization from 2003 till 2007, until he was employed at Guinness Nigeria PLC as Sales Director in 2007. He served as the Managing Director of PZ Cussons Consumer SBU from September 2006, and also served as Corporate Strategy and External Affairs Director within the same company. Ladies and gentlemen, please help me welcome Mr. Alex Boma. Thank you so much, sir, for being here.
Hi, Leila. Thank you very much for the introduction. Once again, my name is Alex. I have not been knighted, so we can leave this out. First of all, thank you for the opportunity to be able to share. I wondered why I was chosen, given that I'm not a technology guru. I might be considered a dinosaur as far as this field is concerned. But what I'll try to do is just probably raise some questions. I mean, a couple of things around what exactly our business is looking for, how do we drive growth, and therefore, how are we able to deliver that, and hopefully raise some questions that we can answer and help everyone be in the right place. I think I have roughly about 15, 20 minutes to do that. So I'm sharing my screen. I believe everyone can see my screen. Okay, what we're going to look at, what are companies looking out for, right? I think companies are all about growth. And for you to drive that growth, you've got to have the right kind of insights that drive the activities that you make. And what are the key areas that when we're looking for insights as businesses that we ask for? And some examples we can learn from, especially with this topic about technology, what people have used. What are some of the constraints that is stopping us, especially in our environment, from doing that, and then just briefly close. But I think the aim of every business owner is how to grow sustainably, right? And the key challenge to that is how do you understand where to focus on and where your growth is going to come from, and how the activities that you're doing will help you do that. So having the right kind of insights is really at the heart of everything that you do to drive growth, because you've got to have focus in terms of the areas of activities that you do, and you've got to also be able to measure and understand how far you're going on that particular journey. And for this to happen, most of this is led by the marketing team within most organizations. And actually, I simplify the role of every organization, irrespective of whatever you do, is where you're trying to get your customers or consumers to purchase your product or your service, and then to do it every time, you know, for them to become loyal to you. And we always talk about the disposition funnel, where you're looking at how the consumer moves from being not aware to where they consider, to where they actually buy your product, and then they use it regularly. You make money only when people use your products and use them regularly. The critical challenge for businesses is to understand where are the consumers, and how do I understand where they are and what is driving their understanding, what is driving their decisions, so that my activities can be focused on delivering that for them. So, and where the big mistakes often happen is where we have a lot of activities running side by side with no underlying insight backing that. We've traditionally tended to do this, right, by using traditional research and all sorts of things to understand how consumers think, act, how trade channels think, act, how our businesses react to certain things. And sometimes we make the mistake in interpreting, which is what actually that cartoon is actually showing. We think we're smart and we know what the consumer wants, but actually the consumer is not really going in the direction that we expect the consumer to go to. Now, for us to satisfy these needs, there are certain insights we need to have. And basically, and typically for most consumer goods companies, you're thinking about, we want to understand how they behave, right? How to behave in shops. How do they determine their preferences? How do we deliver campaigns and what kind of offers we give to consumers and whether these campaigns are working or not? We've got to get feedback from them. Also, how do we get input from them when we're designing products or services and ensuring that these things will meet their needs? How do we understand the different consumer segments and trends? And how do we understand whether we're doing this thing right? We've tended to use traditional methods, retail audit, okay, consumer research, to answer these questions, but increasingly it's becoming more expensive to do this, and therefore a lot of companies or a lot of organizations are moving away from this because they don't have access to the data. The second thing is, under the current circumstances and what has happened with the pandemic, is that there are quite a lot of restrictions in terms of movement. We've had cities locked down, we have countries locked down. When you don't have access to the consumers or to channels or where people can shop, how do you then access the consumers to get the right kind of insights? So even before the pandemic, it was critical that we have to move away from the old ways of talking with consumers, interacting with them, getting feedback from them. But the pandemic has made it even a lot more imperative for companies to move ahead and find alternative ways, which is where technology actually comes to play, and the various forms of technology can actually help us understand shopper behavior better, because most consumers these days right now have one device or the other, or we're connected in one way or the other. And therefore there's a footprint, right, that follows them wherever they're going, right? So we're able to understand that we're also seeing how they can make choices, because there are different technologies that allow you to look at how consumers are interacting when they're in an outlet, when they're online, their behaviors, okay? What ads, what kind of products do they consume digitally and even offline, and how can we do that? Think the applications that can help consumers actually input into the products that they're going to gain. And we can start to see behaviors by understanding the way they act in different social media platforms. So we can start to group consumers into tribes and not the traditional socioeconomic kind of segmentations that we've always had before, that are very, very narrow. We tend to think of consumers in terms of how much money they earn, but actually they're consumers who behave in particular manner. It's just the fact that they are constrained by the amount of money they have at their disposal. So critical for us to use technology, critical for us to understand that there's a lot of technology, and actually the advent of the pandemic has actually made it more imperative for us to be able to look at. So like I was saying, the key challenge for us, so I'll just do a quick rehash of some of the slides because I've gone through them. Key challenge for all companies actually to get people to buy and to become loyal to their brands. And it's critical for us to have the right insights and understand where they are on the disposition funnel for us to drive the right kind of activities. In the old way, it is in the traditional ways to carry out a lot of research, retail research, consumer research, face-to-face interviews, and all of that. It's becoming such a huge amount of expense to be able to carry that a lot of companies are shying away from research, or a lot of companies are using research that are 4 years, 5 years, 10 years old to make decisions for today, whilst understanding that lots of changes have happened in the environment. There are a couple of areas that we always focus on in order to get the insights. Key thing is always about understanding behavior of consumers in outlets, behavior outside of outlets, behaviors when they want to shop, what drives their preferences. When we deliver campaigns and offers, how do they react to this? What works, what doesn't work? How do we get input on product designs and development? How do we know whether a service we're offering is working for them or not working? And also, how do we understand the trends that are happening different from just short-term fads, and therefore we can take long-term decisions? A lot of traditional research methods have been used, but there are quite a number of constraints ranging from cost to whether they're really effective or helping you to understand what the consumers are. Also, the fact that the pandemic, with all the restrictions on social distancing, has made it even more difficult for us to be able to assess consumers. If you relied on consumers going into shops or outlets when the lockdown happened, then you just found out that you were either closed from having access to those consumers or gaps as far as those consumers. Again, rules and the fact that people are more conscious limit the kind of people they will allow into their homes for you to have in-home interviews. And we've had the advantage of having data in the form of mobile devices that people use for every day, and therefore we can actually get access to these consumers using these devices. The key challenge is how do we still get the understanding and insights given the fact that the consumers have a footprint. They leave a digital footprint wherever they go, because these devices are with them all the time. We can actually see the amount of time they spend online, where they spend their time online, how they interact, the tone of voice, the language, and whatever they do, and the kind of things that appeal to them. And therefore, we can actually start to target and use those tools for our disposal. And there are quite a number of organizations or companies that are using technology to digitize their marketing, okay? And actually, the pandemic makes it even more critical. Simple example is Nike using one of their apps like Fit, where it's possible for you in your home to measure your food by taking just photographs of your food, and you can send it across, and therefore they can use that to map. But you can also gift other people. So it allows them not also to see your behavior for you, but actually how people behave in relations to other people. Same thing happening with IKEA Place, where you want to shop and you can look at something and see how it looks in your particular household before you're able to drive that. We have artificial intelligence working in the background and pulling data from different areas. The question is, how do we use this and interpret it into the kind of insights? Domino's using their Anywhere chat bots that are being used by banks, lots of companies, for everything from consumer conversations to gathering data to predictive analytics that is actually depending on what has happened in the past, all the data that you have used to predict the trends, and to simple tools like SurveyMonkey or Google Forms, where you can get consumers to answer questions about their preference. So you can actually carry out online research, right, about their preferences without going anywhere, and therefore you get the kind of insights from consumers. The key challenge is, why are a lot of companies not actually adopting this if it actually exists out there? And there are certain constraints actually that affect. First is about the limitations of online research and consumer feedback. It is easier to understand consumers when you compare what they do versus what they say they will do. And I'll give a simple example. When we're trying to expand one of our brands in PZ into fragrances, it was a toilet soap brand. Now, when you look at the consumer research, especially that was carried online, even though we did not have the product in the market, there were a number of people who were claiming, right, that they use the product. So the question is, and given the social media behavior of people trying to project themselves into who they think they are rather than where they are, the key question is how much of that data is right. So Nigeria, in quote, is supposed to be one of the happiest places on earth. Everybody on Facebook, right, has a fantastic marriage. Their spouses are the best in the world. The husbands are the best husbands. The wives are the best wives. The children are the best kids. So who is responsible for all the wahala we have in Nigeria? So when I correlate what I see, right, transmitted, and what we see on ground, it starts to raise questions about the validity of the data that is collected, and therefore how can you prove, and especially when you're going to use this data for large-scale decisions. The second thing is that we have a huge fragmented database that are not all linked up together, not speaking. So very few organized retail, for example, where you say, can I get all the data for consumers to say, this is exactly the market share coming out of retail. It is still something that is based on assumptions. Where you have some outlets having data because they have tills that can collect what is sold, those things are not linked to any system. So yes, while I can track their movement in a mall, how do I know whether they've spent money in the ShopRite store or they spent in the small grocery that is next to the ShopRite store? Because the data coming from their tills are not linked together for us to be able to analyze. So I can see what they're looking at, but I cannot link what they're looking at with how much money they have spent on what particular thing and how long it took them to make that kind of decision. So large proportion of data is sitting standalone, and therefore there's a limitation on the kind of insights that you can draw or you can leverage from those. So a key decision thing for me as a decision maker, and I think quite a lot of my colleagues who are into decision, is how useful and at which point do you say the data reliability is such that you can take critical business decisions based on this? Because if we took decisions based on some of the insights consumers say, I prefer to do this, I use this, rather than what they buy, right? It then becomes difficult for us to make a decision to say, okay, this is, how can I make a decision based on that? The second key question is always around the cost of adopting this technology. And I think I read in one of the surveys, either by one of the large consulting firms, about the sum of about $1.3 trillion have been spent globally so far in terms of digitization and marketing, but about $900 billion cannot be accounted for in terms of the value that it has delivered. So basically, out of the 1.2 trillion that has been spent, only about $300 billion can be accounted for as valuable. And so the key question is, how long do I know it will take for me to get return, and how long do we start to get the benefits from a business? The only answer I can give to that is the fact that, okay, maybe a pilot approach that can help us manage some of the constraints and starting small, therefore the investment is small, and starting with the low-hanging fruits. Can we start by using technology to answer some of the very simple questions? And if we're able to do that, we're therefore able to demonstrate that this works, and we can get the confidence of business to say, okay, we can go after how we can leverage this to draw the insights, and therefore we can get technology to work for us on a larger scale, especially within our environment out here. In the more advanced societies, it is easy, and some of those examples I showed in the previous slides are actually coming from companies that are working outside of Nigeria, and therefore it's easier because of the access and the leverage for us to be able to do that. And I think one of the last constraints is also the reliability of the infrastructure that we sit. What is carrying the internet today, how reliable it is. Once you move outside the key cities of Lagos, Abuja, and probably Port Harcourt in some of the central area, how reliable is the quality, right, of the internet, or the backbone that carries everything that we're expecting to hang the future of driving digitization for business going to hang around. So these are a couple of challenges and constraints, but I think by starting with a limited approach and looking at low-hanging fruits and using them, we probably will start to build the confidence of the leadership in businesses, and therefore they can start to adopt some of the things that we want to have. So in summary, companies are all about growth sustainably, and they require the right kind of insights to drive their activities. Technology is a means to an end. So technology offers us great opportunities to be able to mine data that exists. There's a huge amount of data that exists, and we can mine those and drive the conversations that we have with consumers. But there are key constraints with the adoption of this technology. One is about the validity and the truth and the insights coming from this data that we get. And the second is how much of the databases are linked today for us to be able to say we can access a huge amount of this data from consumers for us to be able to make credible investment decisions that can guide us. But we have no choice, whether we like it or not, right? Technology is here to stay, and the key challenge is how fast we adopt. There are certain industries, there are certain businesses where it becomes easy, right, for them. It is imperative. There's no other way they can go ahead without this. It's just a matter of time. It's either we adopt or we die, right? But the key thing is, okay, how fast do we go? How much of that adoption do we make, and ensure that, okay, we're moving ahead of the game. And one key thing to look at is always to look at countries outside of Nigeria and see those who have adopted and look at the underlying constraints. And so we can be measuring how the constraints are being removed. So it allows us to be ready for that. One of the companies that have benefited the most from this pandemic was Amazon, right? And it's not because they started to work on the infrastructure during the pandemic. They've been working through the infrastructure. They were not profitable, but they were building a framework to ensure they can drive delivery reliability and customer service with customers. When it became imperative that people could not move out, that framework, that backbone that they built became something that is accelerating their growth. So you don't prepare, right, for a crisis during the crisis, right? So we should not allow the constraints limit our ability to use those technologies. We should start to practice using those technologies and watching out as the constraints get lifted, because when they get lifted, the guys who have started the journey first are the ones who are going to benefit the most from it. So I hope I've been able to just stimulate some thoughts for the panelists to have a conversation, and hopefully for the rest of the audience at least to stimulate some thoughts in terms of areas where technology can help drive insights and also help drive the application of those insights into activities that give companies sustainable market share growth. Thank you very much for your attention.
Thank you so very much, sir. Thank you very, very much. That was really insightful. I think I've learned so much even personally by myself. The fact that it's not about now, it's about creating a structure and creating an infrastructure that lasts and helps the generation to accelerate growth in the future. So thank you so very much, sir. That was really very insightful. We'll go straight into the panel session. I know that we have a couple of questions for Mr. Alex. I do have a couple of questions myself, but we'll just wait till after the panel sessions and we would drop our questions. You can drop your questions now in the Q&A anyways. We have a couple of questions already from those of us who registered to attend. So just give me a minute. I would like to welcome our panelists. I will start from Madam Tolulope Adedeji. Tolulope Adedeji is currently the marketing director of AB InBev, where she leads the teams in Nigeria and Ghana. She's also an executive director on the board of international bureaus. Having been in the FMCG industry for over 15 years, she has built over 15 brands from scratch to market leadership and has transformed these brands from challengers to leaders within their niche. In her current role, she manages the brand for Trophy Lager, Hero Lager, Budweiser, Trophy Stout, Grand Malt, Better Malt, and Club Lager. Before her current role, she was the brand and commercial associate director of Procter & Gamble, Nigeria. She has also been the brand and commercial leader of Procter & Gamble business in Ethiopia and has held various brand manager roles. In her days at P&G, brands under her purview were Always, Pampers, Ariel, Gilead, and Oral-B. She also navigated these brands through a challenging macroeconomic recession in 2016. Tolulope holds a Bachelor of Science degree in Business Administration from Babcock University, a Master's of Business Administration from Awolowo University, and a Master's of Science in International Management from the University of Liverpool. The member of the Chartered Institute of Marketing. Tolu is very passionate about growing businesses, children's literature, female empowerment, and youth development. Ladies and gentlemen, please help me welcome Tolulope Adedeji. You're welcome, Ma. And thank you so much for joining us. The next person that is going to be joining our list of panel is Dr. Goodluck Obi. Dr. Goodluck Obi is a partner and head of the consumer and industrial market sector in KPMG Nigeria. He has deep and invaluable experience spanning 25 years in providing assurance and advisory services to clients across various industries, some of which include consumer and industrial markets, energy and natural resources, government, manufacturing, as well as telecommunications. He has extensive experience in providing audits and audit-related services, including accounting and advisory services to clients in these various industries. His engagements include several due diligence reviews, international financial reporting standards advisory, valuation and accounting services executed within the industry-leading practices. Over the years, he has provided useful insights to his diverse clients. Dr. Goodluck holds a Doctor of Business Administration in Governance and Regulations, a master's degree in corporate governance, both from Leeds Beckett University, UK, and a Bachelor of Technology degree in industrial microbiology from the Federal University of Technology, Owerri. He's a fellow of the Institute of Chartered Accountants of Nigeria, an associate member, Chartered Institute of Taxation of Nigeria, and a member of the Institute of Directors. Ladies and gentlemen, please welcome Dr. Goodluck Obi to our session. You're welcome, sir. The next that we have is Mr. Feyi Olubodun. Feyi is one of the leading authorities on understanding the African marketplace. He actually have developed and published the only proprietary framework to understanding the African consumer's psychology. He currently consults for multinationals on how to win in the African marketplace with assignments across multiple regions on the continent. Feyi is currently the founder and managing partner of Open Space Africa, a strategy and marketing consulting firm with a mission to interpret Africa for business with an African focus, thereby helping them navigate their business successfully. He is the author of the seminal book, The Villager, How Africans Consume Brands, which articulates a proprietary framework for understanding African consumer. Feyi Olubodun is an inspiring speaker, presenter, and facilitator. He is considered as an emerging authority on the African consumer, having given talks on international platforms. He also speaks on innovation in an African context.
You say, I love you.
Strategy implementation across several platforms and business schools. Feyi is a global executive MBA, class of 2015, graduate of Duke University Fuqua School of Business. He is SMP 40 alumni of Lagos Business School and a BSc Psychology graduate of Obafemi Awolowo University. Feyi also serves as a member of the Fuqua Regional Advisory Board, Middle East and Africa. Prior to now, Feyi, being a seasoned leader, was the CEO of Insight Publicists, Nigeria's foremost and arguably West Africa's largest marketing communications firms. Ladies and gentlemen, please help me welcome Feyi. Feyi, you're welcome, sir. And thank you so much.
Thank you very much.
The last but definitely not the least is Mr. Olakunle Ogodengbe. Olakunle is currently the head of information and digital technology at one of the leading FMCG firms, British American Tobacco. He has over 15 years experience in leading and managing the IT and innovation teams within the FMCG industry. He's an experienced digital leader, accountable for technology and digital portfolio across diverse and multilingual business units. He's an enterprising senior business manager with cross-functional exposure in general management, which include business strategy, people management, business-wide communications, change management, security and compliance, whilst leveraging global and exporting local best practices. Olakunle holds a bachelor's degree in electronics and electrical engineering and a master's degree in information systems management. Mr. Olakunle, welcome, sir. So I think I actually didn't get the chance to introduce myself earlier. I'm Lela Omoikirida, and I lead the Enterprise Solutions Division within Softcom as the Vice President. So to take this forward, I would introduce Peter Mukoya, who is actually my co-host or co-anchor for this session, and he will lead us through the grilling session that we have with our panelists. Welcome, Peter, and please take it away from here.
Thanks, Leila, and good morning, everyone. It's a pleasure to be your moderator today. I'm Peter Kunkoya, like you know. Interestingly, I was hired by Alex Goma and P&G 18 years ago, and I worked with Tolu on the same team some years after in finance before she moved on to brands and marketing. I have 18 years experience in FMCG, Coca-Cola in my recent 13 years, and then first 5 years with Procter & Gamble. But without much further ado, over the next 45 to 50 minutes, I'm going to be engaging with panelists and then opening up questions related to the presentation, but also just learning from their experiences over the cumulative years they've worked and how COVID has changed the business dynamics and what we can learn, taking it forward from here. So I'm going to start obviously with the lady, with Tolu. Morning again. And just this year, if you were going to sum 2020 in one word, obviously it would be COVID. And that as a sort of, someone says, let's delete 2020 already, but I know we have 4 more months and we're all optimistic. So can you just share with us and the audience how the COVID-19 pandemic has affected, the consumer buying patterns, and what has that done to your business? But from a positive side, what can business take advantage of to overcome these challenges, both on the short run and then, looking on the long run? And this same question I'm going to pose to Faye, so I want you to get ready because I want to get a different perspective to, maybe from an outside in, what COVID changes are impacting businesses and what they need to do differently.
Thanks. Hello, everyone. Good to be here. It's quite an interesting year, as everybody knows, and I think for us, I will not speak in specifics about the business, but I'll just speak generally in terms of principles. I think for us, one thing that it has taught us is we've always been very proud and we're a very agile organization, but it has taken us like agility on steroids, because that's the only way you can survive in this kind of economy where we are right now and with the COVID challenge going on. So it has really shown, I think, organizations that managed to be very agile, that were able to face reality very quickly and made changes, would have weathered it a bit better versus organizations that were sort of waiting for things to come back to normal. We just kind of just went with it as it was. We're not sort of waiting for a new normal, we're just going with the flow. So if one thing I'll say is that overall, as a principle, agility is something that most companies should embrace in these times, because we really can never tell when everything will be back to normal 100% as we know it. In terms of how consumers have been impacted, there were 2 sides to it. At the initial stage of the curve, I'll say there was overall fear of safety, personal well-being, and just health. There was a lot of health consciousness, a lot of awareness around the subject itself. But from social listening, as you observe the trend, it went from just health safety or personal safety fears to financial safety. And that for businesses is an overwhelming reality, because people went from being afraid of getting the virus itself to getting the virus of being financially stranded, because then companies were starting to either lay off, reduce salaries, stop activation, stop projects, reduce spend. So all these things immediately translated to a financial safety concern for consumers, for employees, for stakeholders. So if I look at the impact of COVID on businesses generally beyond ours, is those 2 sides. Is the health implication for employees, for stakeholders, for everybody that cares, and more importantly, financial safety concerns for their consumers. Because when consumers have financial safety concerns, that directly impacts their purchase decision. Either the patterns of consumption or frequency of purchase, all those things were directly impacted. In terms of how we've tried to weather the storm, is first of all, employee safety remains number 1. So whatever we did, we ensured that we maintained employee safety, because that's number 1 principle. People are the most important assets of any organization. Having taken care of the safety of employees was just trying to ensure that we have business continuity as much as possible, so that we could guarantee financial safety of not just of our consumers, but also of ourselves as employees, as stakeholders of the company. So that will be my recap of how it has affected businesses, how it has affected consumers, is both the financial side, and the LCT. Obviously, for our own industry, it's a very contact-full model. You know, is typically entertainment, beverages, drinks drives a lot of contact. So whether it's events or parties or even bars being open and things like that. So obviously there was a direct impact on business and consumption. But I would say that if I look at the industry and if I look at even the landscape, we did quite well versus our peers or even the industry in the circumstances in which we found ourselves.
Okay, thank you. Very well comprehensively executed, Tolu, and appreciate. So Faye, what would your perspectives be around the impact of COVID on consumer buying patterns, and what can businesses do to take advantage of these changes, both in the short and long run?
Thank you very much, Peter, and good morning to everyone. Just to build on a couple of points that Tolu has made, I think, first of all, the reality now is that consumers are earning less and they're trying to save more than they normally would pre-COVID. Not only that, because of macroeconomic shocks, you see that the cost of essentials are going up increasingly for consumers who are earning less. So what that has done is that consumer sentiments have shifted from a broader range of consumption needs down to almost the most basic consumption needs across multiple categories. And what we're seeing is that brands that have luxury or premium companies that have luxury or premium brands are feeling the impact quite a bit, because consumers are now weighing the proposition of those brands against their real value and also against their pocket. While we see that brands that are in the mainstream or value for money category, they are doing well. So typically you see that companies that have managed to survive the shock are companies that have a very robust portfolio, that have their marginal contributions well distributed across that portfolio. So we see that as a very strong impact. Not only that, it's also changing how consumers and businesses engage with each other. We're now seeing that more and more issues around clustered customer engagement, micro distribution is coming to the fore. We see supply chain issues suddenly becoming a very big challenge. Whereas in the past, a lot of companies can just, once you have a solid supply chain structure, you can basically get by with just a little bit of marketing. You'll be okay. But now, obviously, because of shutdown, because of the fact that we are now in what is fondly called a low-touch economy, supply chain is being challenged. How it's being done currently, does it need revision? Does it need, do we need to leverage technology to bridge the gap? And of course, businesses that are in the non-essential category, not even luxury, just non-essential categories, businesses, for instance, that make products like their lifestyle products like mattresses and all of that, they are being strongly hit because, if your income has reduced, you don't want to buy a new mattress. That's not what's going to come to your mind. You're going to try and feed your family, survive as long as you can until your income comes back again. So these are some of the patterns that we're seeing in terms of the impact of COVID so far in the past few months.
Okay, thank you very much. We very succinctly, said. I wished I saw your face though, but it's okay. I think we can all turn on our videos. Oh, there you are. Nice to meet you finally. Okay, so I found something particularly interesting about Alex's presentation. He was very apt on our current reality and how, I wouldn't use the word desperate, businesses are. When you look at how much we spend on research, but how little value we get out of that research, and how, while data is like the new gold and that's what will determine our future, we're not yet quite there in terms of leveraging technology to drive online real-time connection. So I want to ask Kunle a question, considering his experience working, from a technology standpoint within FMCG over the last close to 20 years. So what would you say are the challenges faced by FMCG companies when it comes to data visibility, and how effectively they can track the movement of value across their chains? And what would your point be in terms of how can we leverage technology to solve this problem? How can we start having more online real-time visibility to the insights that are coming from data, as opposed to today either getting it in a lagged form or not even being accurate at all? I know it was a lengthy question, but I'm sure it's your comfort zone. So just take us through your experience and what we should be doing differently to be able to be more insight-led and data-driven.
Yeah, thanks, Peter, and hello, everyone. Great to be here. And I think in summary, the challenge is trust and traceability, really. Because if you're going to send, on a good day, you manufacture your product and you can track it through the entire supply chain until it gets to the hands of the consumer. But that's not something you can take for granted, especially in a very fragmented space, which Sir Alex, who I like to call Sir Alex, described earlier. So, the key is, if there are so many handoffs between when you have shipped your items, your products, to maybe through distributors, through wholesalers, through retailers, through all kinds of points in the chain, how do you track relevantly those handoffs, and how do you make sure it's optimal? That's the challenge. So data is key, but like has been said, getting that data accurately is a big challenge. So I think the first thing is trust, because you can't deliver your product end to end by yourself, and so you need to build the right relationships with the partners down the supply chain. Hopefully you are able to even co-create solutions together. Sometimes you build it by yourself, sometimes you work with software partners so that it will also enhance that trust, so you can have aggregators who work across that the entire ecosystem or value chain for you, as it were. But at the end of the day, it is to be able to, it's two things. Make sure you try and read the data as much as possible, and that you will have the tools, hopefully, software. You don't even need to go as far as the old blockchains of this world, to be able to read that. A standard mobile app that is shared between yourself and your distributor and your wholesale and stuff like that can deliver that promise. But also, it's also important to shorten that distance as much as possible. So how do you make the throughput between manufacturing and all the way down to being getting the product on the shelves? How do you shorten that distance as much as possible? Because the longer it is, number one, the more pressure it will be on your margins. That's on our side. But more importantly, the increase, there's an increased risk of losing value or losing insights, through that chain as much as possible. So as much as possible, make it short, the distance, and also ensure that you are able to track and be mindful of the consumer or even the customer patterns. In some cases, you might need to go down to the level of USSD, SMS level tracking, and see how best to manage that. In some cases, you can go all the way high up to mobile apps and websites and stuff like that to track those behaviors. Just make it fit for purpose and drive it that way. So, quite a number of times I've been on journey maps or design thinking workshops with, or from a trade marketing perspective. And what we find is that if you follow your product from where you ship it out of your factory all the way down, and you follow it really to when it gets to the shelves, you'll be surprised what you see in terms of where things can go dark, where insights disappear. So you can't fix everything. There's probably the 80-20 rule that you have to apply. And so as much as possible with 80% where there is insights, gather as much insights as possible, track the behaviors as possible, both of your customers and also of the consumers who are consuming your products. But also be comfortable with the ambiguity at the end of the day that you will find with the 20%. You might not need to estimate. Hopefully, the 80% also gives you enough data to then generate the foresights or the assumptions you need for the 20% to make it valuable as well. So, so ultimately, if we were sitting in Europe, you'd probably say you are closer to 100%. But here, it's fragmented, and you just have to make the best use of what you have. So, in summary, get as much data as you can, and also be bold enough to make assumptions where you need to along the way.
Okay, okay. Thank you very much, Kunle. I have a quick follow-up question to that, because we at Softcom have a data generating tool, which is Data Viva, which reviews, for several clients, and then the feedback has been good. But back to what Alex said, there's a big conversation around making this an efficient process because it's quite expensive. So when you think ahead, how do you see technology evolution like Internet of Things changing how we gather data today? And when do you think Nigeria will kind of pivot and make the switch into driving data almost as, or data being generated almost as a seamless process rather than having agents going to collect them?
Yeah, I mean, it's a good question, and there are many options, but what I would say first and foremost is make it fit for purpose. I know a company, for instance, that they leverage Internet of Things by virtue of the merchandising equipment they deploy across the entire marketplace. The way, for instance, they gather insights. So, for instance, I'm selling drinks, and I know that my consumers or my customers need to refrigerate those drinks. So I've put those devices out there. I've even gifted some of my customers the drinks, the fridges that they need to use, but I've installed IoT. So IoT could be something expensive like cameras that can track some of those things. And obviously there's a data protection factor that you need to keep in mind. But then there are other simple things like how many times did they open the fridge door? And maybe that gives you insights in terms of how much volume is being consumed of the product in that particular arena. So we have a challenge in these parts of the world where infrastructure does not readily enable some of these solutions. But notwithstanding, there are solutions that we can deploy very, very readily, across the entire chain. And there are also, looking at it from a fit for purpose standpoint, there are better ways of the question is, what kind of data are you looking for at the end of the day? Because sometimes the data you have might just be volume, and if you're comfortable with that, that's fine. But consumer behavior is also a very valid one. And sometimes I walk into a ShopRite or a supermarket, and I see these well-dressed brand ambassadors who they won't disturb me if I pick the product they want me to pick. But if I'm not picking that product, then I get attacked and please, why are you not buying this? And then they try to market it. Or did they check my behaviors in picking their products, for instance? Because those are the nuances that might be valuable to the manufacturer. So did I stroll around, compare different products before I picked that one? Did I come knowing exactly what I wanted and picked? How many times did people do A versus B? So yeah, you can be able to guess where your consumers are from a loyalty versus trial, point of view. There's lots of data we can capture, that can help us, and that could then be a mobile app or something in the hands of that ambassador who's able to just press a button to say, this is the behavior I've observed. And that gives you a sense of the attitude or the appetite of consumers to your product. So data is out there. It's just a matter of how we capture it. So I wouldn't go saying, let's deploy blockchain, all the emerging technologies, let's throw it out there, because like Alex said, it's expensive and sometimes impractical to deploy, because all it takes is for power to go off and technology goes out of the window. But there are things, observable behaviors. So there's a way in which you can ask your consumers. And like you said, sometimes the answers you get are subjective. But on the other side, the best evidence of, the best source of information is observation. And the more you can observe, either through Internet of Things or through mobile apps, or even through, having people there who can observe, then the better.
Okay, wow. This was very thought-provoking. I mean, if I was to summarize, there was something that you touched on that it reminded me of, the kind of difficult conversations we used to have in the boardroom. And then it's around even understanding why we succeed. Because most times we focus on what went wrong, what didn't go right. But even when we succeed, sometimes we don't even know why we succeed. And just being able to get that insight can even make us succeed more as businesses. Okay, very well said. Thank you. I'm not here as a moderator by accident. Over my 18 years, I've been known to ask questions. And I'm sure those in the room that worked in Coca-Cola know the way I ask questions. So for Mr. Goodluck, I'm going to ask you a couple questions. Please bear with me. So the first is around just the role of government, and how do you think government policies can impact on, consumer buying patterns, but, what policies can government put in place to help strengthen the FMCG value chain? And then the second question is closely related. When you listen to all the dialogue, there's been a lot of economic impact due to the pandemic, that happened this year. And this has definitely affected the purchasing power of consumers. What strategies can FMCG companies put in place to enable them adapt much quicker and still stay profitable? Because the risk you see here, why we're having all these layoffs and salary cuts, is the businesses are struggling to meet the bottom line. I might have my point of view, but it would just be good to listen to your experience here. Thank you.
Okay, thank you, Peter, and good morning, everyone. You backed me questions in two folds. One is from the government point of view, what government can do, and then how would the FMCG operators, what strategies should they put in place to ensure that they cope with some of this? So if I start off with the government, as we all know, I mean, it's simple economics. Government policies put in place have a deep impact on the macroeconomics of what's happening in the economy. And as we all know, the FMCG is at the heart of it. That's the real sector. So whatever is happening at the monetary or fiscal measures put in place by government has a direct impact, that is where, to the consumers and also to the manufacturers. So if I take, for example, what government normally will do in terms of incentives, regulations around foreign exchange, in terms of interest rates, taxes, tariffs, duties, be it import duties, be it excise duties, or whatever it is, depending on the sector that we are talking about. And most recently, we are aware that the government had increased the VAT rate, the VAT rate, from 5% to 7.5%. All of these, they all have a funnel impact into both the customers and the buying ability of the customers, and what it means to do business in Nigeria as an FMCG. Of course, it all has various implications around import and export. As Feyi Olubogo alluded a while ago, you need to diversify your products. We've seen the customer shift from premium products to value brands. So if before now, all your focus has been on value products, and you've never thought about what do I do in the essential or if you focus on the premium brands, you need to begin to think of how to balance your portfolio and all of that. So definitely government policies impact both the manufacturers and the consumers. The consumers, of course, are pressed for choice. If the spending power has reduced, then they got choices as to make as to what do I buy? Do I do this or do I do that, and all of that. So that's clear. So for government should ensure, someone talked about infrastructure and power and all of that. That's a recurring decimal that we all talk about in Nigeria. So if that can be put in place to help manufacturing and the companies in this sector, that would definitely go a long way in ensuring that at least there's some bit of stability. Making sure in the course of government fiscal and monetary measures that we have at least a stable exchange rate to do business. Nobody's telling the government to bring down dollar from 400 and something naira to 100 naira overnight. No, but if manufacturers are able to know that, look, this is the rate and it's going to be so for a long period of time, then that will enable planning. And of course, they will plan their businesses around that. And I talked about all of these policy somersaults and so on, if those can be curtailed and an enabling environment put in place for manufacturers, that will be very critical for government. In the manufacturing space, the government needs to put in place a lot of incentives, especially as we talk about diversification from oil. I'm talking in the case of Nigeria. We need to begin to move away from oil and go to other non-oil products for us as a country. And look, tax is one of them, yes, but we need to be careful in the way we increase tax rates and all that. So that's not really a viable way to go in terms of doing that. But if the government could give incentives to players in this sector, to the FMCG, which I consider to be the real sector, FMCG went from the entire value chain of FMCG, whether it's agribusiness up until the people that put the food on the table. That is a very critical area. Incentives in the areas of tax holidays, pioneer legislation, reliefs from losses, other sorts of incentives. For example, the one that they put in place or they plan to legislate during the COVID issue, where they've said companies who are able to keep their employees for January to December this year as a result of the COVID will get some rebate in their company income tax. If that is the sort of thing we expect from a proactive government, and a lot more of that. So if those sort of things are put in place, yes, that will encourage the real sector, and of course that will help in production. That's on the part of government. Now, if I come to the players, that's the FMCG companies themselves, and taking a cue from what Tolulope had and Feyi had also mentioned in the past around what I would consider to be the gaps or the issues we saw in the as a result of the pandemic and the lockdown that we saw. There were a lot of issues that companies in this sector we are faced with. Even companies that you consider to be agile, as Tolulope mentioned, were found that agility was tested, and we saw that many companies struggled in this area. And that cuts across a whole lot of issues from in the entire value chain, from the supply chain up until routes to market, distribution, technology, automation, all of the things we are talking about today had one way or the other impacted any company you can think about in Nigeria. I don't remember any company that was immune to the impact of COVID-19, as it were. So there is one way, or I don't want to go over what they've said, but we need to understand that, then we'll come up with a strategy for which they need to put in place in making sure that they don't fall again should there be a relapse of COVID-19, because of, as you know, there have been some things, people talking about a second wave and all of that. God forbid, we don't want a second wave, but look, companies to be prepared, because it could have disaster recovery plans. What are your contingency arrangements? What are you putting in place? COVID has taught us a very big and bitter lesson. And I think everyone needs to now begin to be proactive, even more than ever. Before COVID, we were talking about a VUCA world. VUCA in terms of volatile, uncertain, complex, and ambiguous economy that we are dealing with. COVID has put a layer on top of that. And I think we need to begin to plan very well. So if you ask me, because as I said, there are so many things that companies need to begin to do. From the supply chain, which is how do you source your materials? How do you source your raw materials? Where do you get it from? And this is very critical. I'm sure it is not news that over 70% of imports, raw material imports into Nigeria, come from China. And coronavirus started from China. And of course, many companies were affected in the first few months of the lockdown in Nigeria, and in fact, all over the world. So first question for you as an FMCG company, where do you get your materials from? What plans have you put in place to ensure that alternative means of sourcing your raw material? So that's very critical. And of course, along the value chain, how do you optimize? What are your your cost optimization strategies that you put in place? As we've said before, customer needs and customer tastes are beginning to change. How often, now how well have you engaged your customers? Have you engaged, what means do you have to even talk to your customers? The traditional means, as Mr. Goma had said, the traditional means of going out there, interviewing people or whatever means using research agents may no longer be relevant, may no longer work. So what are you putting in place to make sure you get the pulse of the consumers and know what exactly they want? And that will speak to your marketing, your route to market, technology. I mean, the investment in technology it cannot be overemphasized. Many companies had difficulty, that I'm talking from my experience, major issues in the first 6 to 8 weeks of the lockdown, just because they were not able to leverage technology. We are having this meeting today now with over 100 people listening to us. That has become the way of working. And I tell you that many people, many companies could not do this even in the first 4 weeks of the lockdown. Now it's becoming a normal thing. And so that is one way. Technology is important. Whatever the challenges around the cost, around the infrastructure, around the internet bandwidth, and all of that, irrespective of all of those, every company must make sure that we invest very well in technology. That's automation. And of course, talking technology is not just what we are doing now, which is purely from an administrative point of view. Of course, you cannot manufacture. Most companies in Nigeria cannot manufacture sitting in their rooms. We can afford to have this meeting and this debate because we are not dealing with manufacturing process. So the real manufacture is happening down there in the factories where we all have and where we operate, and the people need to be physically there. So the question again is, how are your production process automated? How have you thought about that? Because listen, in the initial first few weeks of lockdown, before the clarification of essential versus non-essential, everything was grounded. Nobody was going to produce. Everybody was there. And then even with clarification of, okay, if you are producing essential, if you're in the essential commodity market, you can produce and all of that. How did your employees get to work? That was not yet considered. It took a while for all of those things to happen. And of course, production would have been lost and sales obviously would have been lost. So automation is very critical. To what extent is your manufacturing process dependent on human beings? You know, have you automated to the point that you do not need 1,000 and 2,000 people to run a factory? We know today there are factories or plants that can run without any human interference, just maybe at the point of entrance and at the point of packaging, that's all. Every other thing in between has no human intervention apart from 5 to 6 or 7 people who are checking quality checks here and there. How ready are you in that sense? That's another question I will put for companies to look for. Now your product has been premium. Guy, you need to take another look and say, I need to balance this product. I need to move into value because that's becoming the order of the day. And above all, how do you get these products to your customer? So take a look. I'm sure the likes of Tolu and Kunle in their various companies. Initially, there must have been challenges around how do I get this product? The traditional way of wholesaling, transporters, and of course, Mr. Goma, wholesaling, transformers, and all of that. Those were thrown out the window in the first few weeks or 1 month of the lockdown. You need to come up with how do I get these products to my client, to my customers who really, really need this. And of course, there were some export sales. I know some companies here export their products, and I know they lost sales when the borders were closed for exports. So initially, it was before COVID, it was the Nigerian border, semi-border, all of that was closed. That's by the way. But with COVID, international flights, which was the other route to fly products from Lagos or from Ibadan to Senegal or to Togo or to Ghana, that was no longer available. So you produce and you cannot sell. You can only sell within Nigeria. So what are you doing? What are you thinking around? How do I get my products to my client, to my customers, wherever they may be? So that's very, very critical in what I think companies should do. Above all, distribution, e-commerce, your distributors or how you get your products from your warehouse to the customer. Recently, I watched a video clip of, permit me to mention this brand, Indomie, being distributed, brought to somebody at home. So he ordered for a carton of Indomie and a drone, I mean in Nigeria, a drone brought the Indomie bag, a carton of Indomie to his house. And the drone, he paid by POS, not by transfer. I'm sure some of you must have seen this, this clip I'm talking about. The drone brought out the POS and the guy slotted, swiped his card, and that was a transaction that was done. Are you ready for that? What are you thinking? Because clearly that is the way to go. That is the future for this sector. And of course, we all have to be ready and prepare ourselves for this, for the new wave, for the new normal, for the new way of working. Above all, you must ensure that you put necessary controls in place. So we've seen instances of fraud happening during this period because of so many things. People were confused and they didn't know. So we've seen from our experience, fraud has increased. So as you begin to do things out of the box, as you begin to think outside the box, you must make sure that you are not letting go or letting your guards down and pushing away controls. Controls must be strengthened even now. Controls, both physical controls and digital controls. Those are very, very cyber security, cyber risk as you're opening your internet gateway to people, to other products, to even suppliers to supply and so on. You are opening up so many things. So your cyber security must be at the top notch. So let me leave it here. There are so many things I have in mind, but just for the sake of time and for other people to contribute, those will be some of the things I will talk about. Thank you, Peter.
Wow, wow. Very, very comprehensive. Good luck. I think next time I will just ask you one question. But this was good. This was good. And very, very well dissected and quite detailed and a lot to learn. I was just taking notes. And thank you very much for the content and contribution. So I'm going to go back to Tolu. And just for a time check, we have roughly 12 minutes left. I have about 2-3 questions, so I think we're in good time. So I remember, Tolu, when you started earlier, you mentioned the word agility. And I like that word because we use it both from a people point of view and even from an organization. So what I wanted to find out is, knowing that as consumers, their needs, their desires and expectations are changing, for an agile organization, how effectively do we measure and track these consumer changes? Or what are the ways we can measure and track consumer changes so that we can then, fit our propositions to meet their ever-changing needs? So what will your suggestion be on the modes in how do you even understand when the consumer is moved away from something, or how do you preempt where the consumer is headed?
Okay, thanks a lot. I'm mindful of time, so I'll try to be brief, but feel free to ask any follow-up questions if I didn't give you all I need to do. So overall, I think most of the times consumers are actually always speaking. We're just the ones mostly looking in the wrong place for the answers. And there's a concept called social listening. Social listening means that you just listen to everything that is being said about your brand. Thank God for internet these days, thank God for digital. With social listening online, you can actually know what consumers are saying about your brand, just by observing conversations around your brand, tracking mentions of your brand, tracking mentions of your industry, of your category. Another thing you can look at for sure is the numbers. Numbers don't lie. So I can speak for my industry, for example. Typically, you would know that on-prem consumption, which is consumption of beer on premises like bars and restaurants and places like that, is the typical norm of the day. But since these places were locked down, you could see that the sales or the shipments in those areas, it's like almost non-existent for a period of time. That is consumers speaking to you already. I think most times you try to look for new data and start to commission new researches. Meanwhile, every day consumers are speaking to us online, offline, listening on radio programs, watching consumer behavior patterns changing, their purchase patterns changing. We saw a bit of an increase in the key accounts, like modern retail sales out. That's consumers speaking to you already, because you can already see that the shopping pattern changed a bit. There's a bit of an uplift on e-commerce sales pattern. That is consumers speaking to you already, because you can see that they're changing consumer patterns. So it's not every time you have to go from scratch and commission and research. There are places for that, obviously, but most times just by listening and observing trends, observing data, observing insights around you, you can already tell when consumer patterns are changing. You can already tell within your portfolio which brand is starting to grow faster than the other. Maybe your premium brand is starting to decline. That is consumers speaking to you, and your value brand is starting to grow. You can already tell if a region is starting to grow more than the other region. For example, maybe if your brand needs to go through the borders to another city, and suddenly that city or that region halves in volume that's already tells you something, that what changed in that environment is the border closed, there's something changed. So most times we have a lot of data, and we get more paranoid for more data and more data. But even the one that we have, most times we're not milking it enough. We're not looking at it critically in details with deep thinking to see what consumers are saying to us with that data. In terms of how we can adapt to it, I think I've covered a couple of things. Is what channels is changing. For me, the biggest gap that this lockdown and this COVID period revealed was a go-to-market gap. For those that got classified as essential, probably they will not feel it as much because, yeah, your business is still moving and people are still moving. But for those that their businesses were maybe considered non-essential or the restriction of movement really affected, even if you're talking to consumers online on digital campaign, you know, media, whatever, radio, but if they can't buy your product, that's a big issue. And I really hope that for everybody listening here, you can, after the COVID is over, we don't think, okay, now thank God we can go back to our old lives. Personally, I think it as a challenge. I think it's as an insult almost that something could happen that could dramatically disrupt the way my business model operates. So even after COVID is over, we can now sell, bars are open. I'm thinking, what can we do to ring fence and ensure this doesn't happen again? Because who knows what will happen again tomorrow? So that gap of go-to-market, that gap of logistics is something that tech, experts need to look deeply into. And for any business in FMCG, I'll say we have to start leapfrogging into B2C models. I know it feels very futuristic and very far-fetched, but that is the one way that you can future-proof, businesses against this kind of occurrences. Today is COVID, tomorrow, I don't know what it's going to be. And if you cannot reach your consumers, because there are 4 P's of marketing, right? You have the product, you have the price, you have the communication and the awareness. But if you cannot find a way to reach the consumers in that period, that is lost sales. Even after COVID is over and they come back, they can't drink everything they've not drank in the last 3 months. There's so much they can do, responsible drinking, right? So that's a big gap I've seen. And I think that the internet is the one thing that is going to help us, because we're coming from behind already, leapfrog this gap. In Nigeria right now, I think Nigeria ranks top 10 globally out of over almost 200 countries globally in terms of internet penetration. You can imagine for a country with our level of poverty, and this is a very, very disruptive trend that we cannot ignore. And with the population growth forecast for 10 years from now, I imagine you have almost maybe 150 million Nigerians having access to internet, or even 200 million Nigerians having access to internet. What are we going to do with that information to really drive top line and bottom line, not just for awareness, but to really drive that consumption? How can we drive consumption? And it's a lot of work. It's very futuristic. It's not something that can be done by any company in 1 year or even 2. But we need to start laying that foundation and start working on it and understanding it. And I don't think we can, overall in Nigeria, change everything, make it like the US or make it automated like Singapore or China. No, I think we need to work with the chaos that we have. If you're waiting for the day that Nigeria will be like everything organized, everything is working, infrastructures is there, we'll never do anything. We need to design around the chaos. We cannot try to make Nigeria now like US or China. We need to design our technology to work with our structure as it is, as advanced as it is. Our tech needs to work and fit into that system, not try to change that system. Because when you try to change that system, then you're trying to overcome 2 barriers at the same time. Fixing the system, then introducing a new solution. That's like hitting your head against the rock. So those are the key things I would like to drop, because I know I'm running out of time, is that, consumers are speaking all the time already. Look at your numbers, look at the trends. We've seen an increase in neighborhood consumption. People don't want to go all the way so much. They want to consume closer to their neighbors, to their houses. Event skills are changing. Entertainment itself is changing. Who would have said would have done on e-concerts or online in Nigeria? But we have to do that in those periods. Virtual reality can help with providing entertainment in a digital way. So already there's a lot of changes that have happened, and we have enough information already to start to make some changes. And in terms of the biggest gap for me would be that whole go-to-market logistics part, and how technology can help us leapfrog from just a very multiple layered distribution system to a B2C model. And it's quite a long journey actually, but it can be done.
Wow, okay. I'm almost feeling like we need another session, Tolu. This was very, very thought-provoking and comprehensive. Thank you very much for sharing your wealth of experience. I would just say one thing from a softcom lenses. When you think of a B2C go-to-market strategy, obviously there are a few challenges. One will be when you think about the logistics itself, which is the last mile delivery. Another is payments. On payments, we have a solution that enables you pay anybody as long as they have a phone number, and that's our way to drive inclusion, and that's the AOO app. So let's consider this as we're designing some of our solutions for go-to-market. Now we have roughly 5 minutes. I'll just go straight to Kunle. I just want you to explain to us, what your thoughts are around automation of processes, because that's one way we believe companies can become more cost-effective and efficient. So can you just share your perspective around what processes FMCG companies can automate to be more efficient? Thank you.
Yeah, I'll be very brief given the time. So very summarily, I would say follow the paper trail as much as possible. Where you have many handoffs in terms of paper approvals and so on, just keep an eye on that. And if you would want to prioritize, follow the spine of the organization. And by that I mean, don't just go automating paper processes all over the place. Start from where it will really make the most impact. So what's the core manufacturing process that you have? What's the core planning and insights process that you have? What's the core marketing process that you have? What's the core consumer engagement process that you have? So from manufacturing to consumer, look at that spine of the organization and prioritize that aspect as much as possible. And the options there are significant, so because the more you're able to, I would say, improve the throughput from that source to destination to the consumer, then the more the significant value is there. And that will achieve two things. One is that it will give the organization the opportunity to interact with technology much more. And also it will make them, and this is really where you want to get to, it will make them ask questions for more. And that is significant because you are moving them from just doing to being. And that's where the culture sets in. Because once you hit that sweet spot where there is a demand for new technology and all that, because people are challenging themselves, then ultimately that's where we want to be, and that's a good thing. But majorly, really, it's tracking where the bottlenecks are, and the bottlenecks are really when it's like your guy is waiting to sign that document, and or that approval needs to go from this table to that table, and you have to automate that with priority. And also in automating, you have to automate in such a way where you can track so that you can check also where the bottlenecks are showing themselves, because the human behavior element is there as well. And the more you can influence that through governance and other practices, the better. But automation gets you to see the data, and that's where you want to be.
Okay.
Very briefly.
Thank you very much, Kunle, and very succinct and actually very simply clear. And then thanks for the insight. I think we just have one more question, and I'll be asking Faye. Haven't heard all what we've said. There's a lot about data, consumer, change agility, and all that. So I just wanted to ask you, from your own experience and perspective, how can an organization create a data-driven brand strategy that will be more closer to leveraging what the consumer, insights are, in how they build their brand perception?
Okay. Thank you, Peter, for that. I think the short answer to that is you have to build an MIS framework, marketing information system. And the key to that is there's part technology, part context. By context, I mean you have to carefully decide and select the kind of information you want to see on an ongoing basis. And that's what you build into a research framework that you can then use technology to sort of amplify or sort of leverage on technology to make it easier to track that on a consistent basis. And then you can track relevant behavior, because the part of the challenge is why we have a lot of data and it seems a lot of it is not as useful as we hope is, data is an output from the questions you answer. So if you ask the wrong questions or questions that are invaluable, then the data you get out of it is going to be invaluable. So we need to spend quality time on articulating the questions we want to ask, the behaviors we want to track from consumers, and then we build a marketing information system around that, and then put that on a technology framework that allows us to consistently track what is going on along the right behaviors. We don't need to know everything. as an organization, but we just need to be clear the information we really, really need to know, and then we build around that.
Very well said. Thank you, Faye. Before I give one opportunity for a last word from Tolu, I just want to summarize by saying thank you, everyone. I have learned a lot. I'm sure both the audience and the panelists have also learned. I saw some of us taking notes. This was very, very comprehensive, and I've enjoyed just being your moderator, and then I think I've also really enjoyed having this interaction. So Tolu, can you give us your last word, and then we hand over to Leila.
Yes. Well, I'd just like to chip in that it's very important that we keep cost in mind. And I believe that technology should use itself as an advantage to deliver cost efficiencies to businesses. We know that this is Nigeria. One of the first things I talked about was financial safety for consumers and stakeholders. And now the economy, we know the outlook of the economy right now with devaluation, recession, everything looming. I feel that consumers are not really willing to pay a premium or even convenience and every other benefit that technology is going to bring. And that is where technology can come at a superior value equation by offering an extra benefit, but at a lower cost. I know it doesn't sound like it makes sense, but I believe that that is a real advantage that technology can add to our businesses. We pride ourselves on offering consumers superior value. So every business would want to embrace something that would enable them to be more competitive in the marketplace when it comes to cost, because the consumers are just not ready to pay a lot more for anything these days.
Okay, very well. Thank you. Thank you very much, Tolu. Very good. And this is coming from your finance background. I guess, yeah, we always need to find the balance, and bottom line is king in this case. So over to you, Leila. Yeah, we can take it from here.
All right, thank you so very much, Peter. You handled that, very smoothly. Thank you, and thank you so much to our panelists and our speaker. Thank you so much for the insights that you've dropped. So during the registration process, we did ask a couple of people, questions they would like answered. We currently have a couple of them. I would ask 2 questions, and then I would open it up to questions now from our participants. So if you have any questions, I see that some people did raise their hands. If you have any question, please raise your hand, or you can just type them in the Q&A section of the toolbar. So I'll just ask 2 questions now, and then we'll take it from there. The first question is, how do we get, and I think I'm going to ask Kunle and Tolu, how do we get the cash ingrained consumer to switch to adopt digital payment services? So I think one of the questions that Peter asked earlier was even around the fact that for your value chain, how do you help automation for your value chain, whether it's the distributors, the wholesalers, and all of that? So this question is really, how do you get cash ingrained consumers to switch to digital payment services? So I would ask Kunle and then Tolu to help give us their ideas on their various perspective. Thank you.
Thanks for that, Leila. And the short answer for me is you have to incentivize it as much as possible. And by putting incentives into it, then, so for instance, if you are in Lagos Island and you have this customer who you want to move to digital, and this person keeps his money under his bed or her bed, and you want to influence that, there is the engagement factor, yes, but there has to be something in it for him to try this out and also to trust it. So the first part of it is it being trustworthy. They need to see that it works, which is fine. But the other part of it is, what are you rewarding them for? And so you have to look at it in terms of what kind of loyalty or what kind of incentive can you allocate. And in doing that, I think the best thing is to say, what is the cost saving for you in this person going digital and not being cash centric? So is it in terms of you getting your money on time? Is it in terms of you having to send someone there once a week to go and collect cash? Look at that in terms of an amount, take a percentage of it, a good, reasonable one, and offer it in product, in value, in whatever, as an incentive to that customer to encourage them. And obviously for you, it's also the hidden value of being able to track your money as it flows back and forth and all that in terms of that effectiveness. But ultimately, it's an incentive. If they can trust the system, that's a major factor, but they need something has to be in there for them to be able to take that on.
Thank you so much, Kunle. Tolu, please, your view.
I believe one of the key issues or barriers to consumers adopting this today is trust. Personally, I don't use my card details just anywhere because we know internet fraud is real. And I feel that if we need to solve that problem, we need to put a concrete solution. I don't have an answer, but just top of my head, I just thought about this right now. Why can't there be an insurance for payment solutions? Just thinking, just a random thought. Why can't the payment solution providers corporately, as an industry body, work on something? Because people would feel more reassured if they know that if I were to lose my money tomorrow, there's some form of comfort or guarantee that I'll be recovered or compensated. I don't think that we can wish these problems away. These are things that are real. Might not apply in other continents or other countries, and they've not thought of a solution for them. So since we have this problem here, we need to then brainstorm locally. What can we do to take this barrier away realistically? Because no matter what you sell to me, even at my level of education, I'm quite hesitant with anything online payments. The higher the risk, the higher the reward, they say. So I think the industry needs to put some brain power behind that. It might not be insurance, it might be something else.
All right, thank you so very much, Kunle, and thank you so very much, Tolu. I do have another question here, and the question is actually for Mr. Alex Goma, and I would also like for Faye to give us his perception as well. When you were speaking earlier, Mr. Goma, you did mention the fact that a lot of times we don't get accurate data in terms of how consumers' perception or whatnot. So you gave an instance of a product not being in the market and consumers actually saying, yes, they got it. So one of the questions we got was, how do you measure consumer reaction or perception to products at point of sale or point of consumption? So Mr. Alex, please, if you can help address the question.
I think, I think Kunle has attempted to actually put some views on that regarding if you're using technology, for example. It's more about observation. And I think the reality is that you understand a lot more from consumers about what they do rather than what they have said, right? So if you observe what they do, if you observe the behavior, you're likely to pick out a lot more. And I think also in defining or in designing your questionnaires, even if you're going to ask certain questions, the questions have to be designed in such a manner where they are open-ended and you are therefore able to build congruency, right, from different answers. Because if you ask very clear, direct questions, consumers either tend to think, especially these days, okay, is there a reward for this? So if I ask, like they say, Nigerians answer question with question, because they want to find out why are you asking, right? If they understand why you're asking, they will give you an answer that suits what they think you want to hear. And if it's because they believe that there's a reward, they will think of what is the best possible answer that will give a reward. So you've got to build a skill to put different questions that when you start to triangulate the questions back, you can build congruency between this answer and this answer and this answer to get your solution. So it takes a bit of skill. And some of this, yes, machine predictive analysis, all the artificial intelligence can help you do that. But sometimes understanding insights, understanding consumers and how they react or certain behaviors is why you still need a human being to interpret the data to say, okay, this is exactly the kind of insights that you have. So you've got to be able to have that, and then you've got to be able to go to your gut, go for what is roughly right. If you always look for 100% accuracy, right, you're probably never going to take a decision. So I had a boss who used to say, I want to be roughly right rather than 100% absolutely right, and you do nothing, or therefore you're 100% wrong. And then with each time you use data, you've got to be careful to always relook the data sets again within the context in which it's asked. The same question, the same answers today could mean something different in a different context. And you've got to have the, what I call it, the wisdom or the sense of judgment to be able to do that. So by trying out a lot of times, by trying out a lot of different iterations, you can build you can develop the ability to get closer to what will be a near accurate answer. I'm not sure you can ever have 100% certainty.
All right, thank you so much, sir. Before Faye actually gives his viewpoint on that, I want to add something else because there's another question that is quite similar to that, and it is, how do organizations use technology to measure effectiveness of trade activities or trade promotions? So, you know, I say buy one, get two free. How exactly do you measure that these activities that you're putting in place are actually effective, and what measurement metrics can be used for them? So if you could just, you know, all together answer that question, that would be great. And then we'll move on to questions right now in our Q&A. Okay,
thank you very much. I often tell the story of how many years ago I was working on a product testing for an FMCG brand. I think it was actually Coca-Cola, many years, about 15 or so years ago. And we tested 3 products in Ibadan. And when it came back, the consumer said all the 3 products were equally good. Of course, you know, this is impossible. And we had to bring context to interpret that data by realizing that in Ibadan, people are very diplomatic in their response to everything. And they felt that it was rude that someone would give you 3 products to test for free, and you will say any of them was bad. Now, we knew that one of the products was very bad. We knew that already. And so we had to use that to discount the value of the data before reporting it back to the client. Otherwise, the client will look at us and say, these people are crazy. What do you mean? And the point of that story is we have to find clever ways continually to balance observable data with reported data. Quantitative data, which is largely where technology data is focused, is reported data. You're asking someone to tell you how they feel about something. There are a lot of variables that could determine what their answer is or not. And there's no way for you to validate, you know, to a large degree whether the answer is correct or not. You have to bring in observable data. And technology can help in that regard. In ethnographic methods, we talk about non-participant observation, where, for instance, you've got these brand ambassadors in the mall. You have your shelf there. You are monitoring their interaction with your products. You could just use their mobile phone to record, you know, consumer expressions, you know, the pause it takes from when they see the product to when they actually pick the product, whether they return the product back. All of those things are valuable information that you're using technology to gather them, but that's observed data. It's not reported data, you know, so you minimize your bias when you balance observed data with reported data. Now, to your second question around trade promotions. First of all, I think that one of the challenges I've had over the years is the way promotions are used. We must be clear that promotions are not equity builders when it comes to brands. They are primarily help to push your sales in the short term. And I've seen marketing directors spend 3-4 years in a row just running promotions every quarter. And I'm like, no, you are devaluing the equity of your brand, because when you run promotions, you are signaling 2 things to your customers. You are telling them that the value of the product can be discounted. Secondly, you are passing the risk of consumption to them. You know, so if you tell them they get one, if they buy one, now they have to go away with 2 products that they cannot return, and all of that. And God help you if your product is not great. So promotions are meant to be used very tactically, and you must manage the frequency of the promotions around your brand so that you don't devalue the equity of your brand over a long period of time. Now, how does that now relate to measuring? The key is to be clear what you are measuring. Are you measuring selling at the trade level, or are you measuring sellouts? You know, you have to check, you have to be very clear. Again, it's all about what do we want to measure here? Do we want to measure how many people filled our biodata forms? Do we want to measure how many people took the products? Do we want to measure stock? or are we going to measure, the financials from the trade guys as compared to actual consumption? We have to agree on that first. And then at the point of sale, it's quite easy to deploy technology. Android tablets, mobile phone apps, and all of that can just be used to, at the point of sale, at the point of trade, while these promotions are going on, to gather the necessary information. But it's the design of the promotion itself is where I would say let's pay the most attention. The technology bit, the capabilities are already there. They can be plugged in as needed. Thanks.
Thank you so very much, Mr. Faye. That was really very well put and comprehensively answered. Thank you. So we're just going to take 2 more questions. I think some questions have been answered already. Take 2 more questions from this. I would just like to say that we are going to be giving Mr. Faye's book to some lucky winners. First, we're going to identify the first 2-3 people who join this event, and then we're going to reach out to you and give you a copy of the book. And we're also going to be giving a copy of the book to certain people who were active and had previously asked questions, or we asked questions in the course of this. So let's just take 1 or 2 questions that we still have here. Number 1, I will take it from Mr. Victor Odu Tokun. Sorry if I murdered your name. How reliable do manufacturing companies find data from data measurement companies? So in bracket here, we have Nielsen, Ipsos, Kantar. I'm not certain who exactly this question is directed to, but I think that I want to direct this question to Mr. Alex, and also direct this question to Dr. Goodluck. How reliable do manufacturing companies find data from data measurement companies or research companies, I think, as well? Yeah.
I think for me, it's a question of depending on the category that you're measuring and the size of the coverage of the category. So I think that's what gives you a level of reliability, because I think the model most of these research companies are using is a limited sample. They use a sample which is supposed to be representative of the universe, and therefore from that you extrapolate. So if you find a category that is widely distributed, right, you will have a high level of reliability on the data, because if you're using a sample, say for example, for retail audit of 6,000 outlets in a universe of 700,000 outlets, right, the product has to be, or the category has to be such that is widely distributed for you to have data that's reliable. So you've got to apply that sense. If the category is very small and very niche, it's unlikely that it may have that. So again, I always say you use the data together with other pieces of data to be able to find some congruency. Now, what I always used to tell my team, because when the results are fantastic in our favor, everybody says Nielsen, Ipsos, or Kantar is right. And when the data is adverse, they challenge and say the data is wrong. So I have a very simple approach that no matter whether, it's not about whether the data is right or wrong. I say, first of all, there's a small number of outlets that this data speaks to is right for, all right? So if we are bad, it's telling us that we're bad in a small number of stores. It doesn't matter whether we accept that it says we are bad overall. So let's go and find those number of stores, and therefore let's try and fix it. In the same way, if we're fantastic in a small number of stores, okay, it tells us there's something good we're doing there. Now we're not doing it in the rest of the stores. So we spend less time worrying about the validity of the data, but to recognize the constraints or the band within which you can use the data, and therefore the kind of decisions that you can use the data. So if you take that and you triangulate with some of the internal data that you do, you can always find out that, okay, you can use the data. If you're also involved in dialogue with these guys, because I've found out by also sharing with them the data that we have and all of that, you can find ways of actually finding that this data covers. So roughly, I would say there's 60–70% level of accuracy for categories that are very wide. Therefore, you can use it for huge categories. For categories that are very small or niche, or you're coming in, I will tend to go for very specialized research that is therefore targeting the areas where you expect to see that.
Thank you, sir. So, Mr. Goodluck, I don't know if you could, mostly because you also leverage some of these, organizations for data gathering. So, if you could help answer the question as well.
Yes, Lila, thank you. I would just add to what Mr. Alex Goma said, because they are the primary users of these reports. From my point of view, from where I stand, we normally ask for these reports from our clients when we go to them. So people like Alex Goma will ask, do you have AC nursing report? Do you have this on this? And as he said, I will just agree 100% with everything he said. We've had mixed response from CEOs and finance directors when we ask, especially questions around competitiveness in the market. So in some areas, yes, the reports, the executives rely on it, they like it. As you said, sometimes when it favors the entity he's promoting, he's talking about it. In some instances, they say, I really don't know how they got this report. So yes, to some extent, it's reliable. At least it gives an indication as to what has happened. So if, say, you've lost market share by 5% or by 3%, or this is what your customers are saying, that your brand, your product is not as good as your competitor. Even though my sense of what the CEO says is that, yes, it may not be correct, but it gives an indication as to what the market is thinking. So they can use that to begin to work and so on and so forth. So yes, to some extent, it is reliable. And of course, they've argued around the methodology that will be used by these research agencies, research companies in coming up with this report. For me, as both a consultant, as an auditor, I rely on these reports because I believe that this is what they do. This is what they've been trying to do. This is what they do. It gives me a sense as to what I'm expecting. I know that, yes, when I mean I rely on it, I use it as an indication. Then I will use that to ask probing questions when I'm discussing with my clients in whatever capacity. So yes, it depends on who you're talking to. But as somebody was talking about research methodology, and that's Faye, when he was talking about non-participants and so on. Some of these things are not 100% accurate. It depends to some extent what use you want to put to it. So that would be my response.
Thank you so very much, sir. Thank you very much, sir. Just because of time, we would ask just one more question. And what we can do is would actually collate the questions as well. Some people are sending questions in the comment section and chat section, but I'll just answer one question. And it was by Chukwuemeka Anyawu. And he directed this question to Tolu and Alex. How competitive is the FMCG industry in Nigeria, and how informed is an average consumer in Nigeria? So Tolu and Alex, please, over to you.
Okay, I think it also depends on the sector that you are operating in, because across different sectors, you find a lot of competition, okay? I've been in quite a number where you have very intense competition. In the tobacco industry, we were very dominant. Yes, there were other competitors, but because we had size and scale, we could actually drive that. In the beer business, there's quite a wide, it's very strong competition. It was very fragmented, but there's been consolidation, okay, by the three big players, right? AB InBev, Guinness, and Nigerian Brews. So depending on the sector you find in the feed mills and feeds business where we operate, there are quite a number, starting from multinationals to local players and to even small toll millers. So each category gives a different challenge, but what you tend to find is the categories where there's a lot more potential, you find international players in, you find a couple of local players, and then you find very small SME type players within those categories. So you're dealing with people who have deep pockets, you're dealing with people who have local knowledge, and you're dealing with people who are playing based on the locality where they are. So I think it's evolving. At the end of the day, the more the constraints are taken out of the environment, I think it will attract a lot of people. Yes, we're a country of 200 million people. However, I usually say there are 4 countries in those 200 million people. There's an extremely rich population of 5 million, another relatively rich of 15 million, and then people who are striving of about 30 million, and then about 150 million that are struggling. Once you start to lift more people out of those 150 million people, of course, people will come because you have critical mass. Right here, it's easier to reach 200 million people. So the competition will get a lot more intense. How discerning or how informed is the consumer? There are lots of tools at the disposal of the consumer, right, to have the information. And there's a lot of information. So like somebody had said before, we have a high level of internet penetration. There's a high level of use of smartphones. What I question, and some people will slaughter me for saying this, but I'm going to be very provocative, is the fact that a lot of our people have data, but there's not a lot of thinking. Our education has not helped people to think, right? We don't build people to think critically. We build people to have certificates. And the simple example I always use to people is when we have crisis, okay, COVID right now, but Ebola, right? There was rumors going around that if you took your bath with salt water, you were free and immune from it. Anybody who did basic biology, Form 3 in secondary school should understand that it doesn't work. Now, when I see the number of people using their smartphones to pass something that is not so smart around, I will query, right, the level of understanding. So on certain areas, people who are interested, you know, there are lots of people who like beer. There's a lot of myth about beer, even though they've been drinking for 20 years, right? And there's information to tell them about everything, but they pass all of this. So there's a health warning out there. Lots of people have access to data, have information to, some have facts, but I query the level of, there's a question mark about the level of, listen, but I always go with the assumption that they don't know, because from a manufacturer or somebody trying to sell, I cannot assume that they do not know, right? It allows me to ensure that I can avoid errors. But the reality is a big question mark for me.
Thanks a lot. I'll just add a few sentences to that. It's difficult to top that. I think no market strategy is an easy one. Whether you're using the red ocean strategy or you're using the blue ocean strategy, whether you're trying to gain market share or you're trying to develop the market, you know, none of them is an easy feat. So I would say that broadly speaking, most categories are quite competitive, because if you're working within a certain market size and a market is not growing as fast, that means that you all have to jostle for the same pie. So if you're going that approach, it's fiercely competitive. And if you're also trying to develop the market, like we said, we have big population, introduce new solutions, meet new needs. That is also a lot of heavy lifting, because that requires lots of investments, lots of structure. So none of them is an easier way out, actually. Both of them are fiercely competitive or tough jobs to do. In terms of the consumers, I always believe that consumers know the best. Yes, I know that in many instances, consumers can be quite literal, you know, but even in their literal understanding of many things, that is their best understanding. And as a marketeer, our job is to ensure that we work with understanding consumers as they are, not as we want them to be, exactly as they are, and work to meet their needs. So pretty much, I believe that the consumers mostly know what they want. They might not be able to express it in a very sophisticated way or the way you think it is. But after all, that's what equity is all about, is the way consumers see your brand. It's not the way you want them to see it necessarily. If you want them to see it in a certain way, but they've not managed to see it that way, you have to keep working at it to ensure that they understand what your brand should be and what your brand actually stands for.
All right, thank you so very much, Tolu. That was really well put. Thank you, Mr. Alex, as well. So we have just about 4 more minutes left, and the last thing on our agenda is, besides the closing remarks, is to just have all the panelists as well as the keynote speaker give 30 seconds of their last remarks. In summary, what do you think that we should take out of here today? So I will start with Mr. Alex.
Okay, in summary, change is constant, right? And it's only those that are capable of adapting that will always survive. So, and technology is a means, is a tool that will help us adapt. And I think it's critical that we do that and find ways to do that within the constraints that we have within the environment. Thank you.
Thank you very much, sir. Tolu, please.
I believe that one thing this year has taught us the ability to make a good choice. As business people, we are constantly faced with making decisions and making choices. And what differentiates those that eventually succeed from those that don't is the choices that we make. Pretty much. So I know that it's very tough. It looks like a big elephant to chew. Technology, all the barriers to it, all the infrastructural challenges. But we have to make a choice to leverage technology to leapfrog our businesses and honestly the economy out of the current state that it is. Given the trends that we have in terms of consumer population, in terms of technology access, we are poised for growth if we can embrace technology and really drive it to deliver business results.
Thank you very much, Tolu. Dr. Goodluck, please, your last words.
Okay, for me, technology is the way to go. Technology has come to stay. The new way of business is about technology. So I encourage everyone to invest in technology, embrace it fully. Do not be the first to die because of lack of investment in technology. Thank you.
Thank you so very much, sir. Mr. Faye.
Well, for me, it's keep your eye on the consumer. We've got to keep tracking them and be ready to adapt quickly as they are changing. Because at the end of the day, no consumers, no business.
Sure, sure. Thank you very much. No consumer, no customer, no business. Very, very well put. Mr. Olakunle, please.
Yeah, I think very close to what Faye was saying, be consumer-centric, don't be product-centric. I would say love your consumer more than you love your product. And that gives it the best chance of getting through. So that means being open-minded. That means listening. And we've talked about all the observation and asking approaches that you could use for that. And continue to see how to build in agility into your product to be able to adjust to the changing needs of the consumer. Yeah.
All right. Thank you so very much. I would like to use the rest, of the minute to thank so very much all our speakers and our panelists today. Thank you, Mr. Alex Goma, so much. Thank you, Dr. Goodluck Obi. Thank you, Mr. Faye Olubojones. Thank you so much, Mr. Olakunle Ogedegbe. And thank you, Madam Tolulope Adedeji. This has been very, 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 very insightful and value added. I can see someone saying, I'm raising my 2 hands for the book. Thank you so very much. I think off the top of my head, some names that I had written here: Victor Wangu, Victor Odutokun, and I think the rest of the team, the hosts, have been actually just penning down names and will reach out to you. I want to say a very big thank you to every attendee here today, every participant. Thank you for joining. Thank you for staying with us through and through. And please, if you need to reach us, you can reach us at hello@softcom.ng, or just visit our website, www.softcom.ng. The future webinar is, like I said earlier, a series that we have every time. It depends, it could be in a particular industry, say FMCG or FSI or the public sector, where we just come together and bring thought leaders that address certain discussions or issues that are currently, in our society. And we'll reach out to you for our next webinar. Hopefully it's this same month or next month. Thank you so much again for joining us. It's been a pleasure hosting you today. Peter, I don't know if you have any last, words for our panelists and participants, and then we can close for the day.
I think, thanks, Leila, and everyone. This was really, really enriching. And I would say in a nutshell, the mantra is, if you're not adaptable and you're not agile, then you might not succeed in business. So I think those were the 2 key takeouts: adapt and be agile. And I guess I'm looking forward to how we will apply the learnings from this session in the future. Thank you all.
All right. Thank you, everybody, and have a good afternoon.